British commercial property market opportunity and risk. 6 themes that are expected to be the most influential for the UK commercial property market in 2022. London is considered to be the home to one of the world's leading financial centres, supported by a network of regional cities that continue to embrace urban revival. Whilst domestic and international investors continue to do deals in United Kingdom, the country provides a stable and secure political environment, providing confidence to commercial property investors. Microsoft and Coca-Cola are amongst the leading multinational corporations who have chosen to locate in United Kingdom. A cornerstone of the English economy is its highly skilled workforce, with the country acting as a magnet to internationally professionals and workers. The country also provides a host of real estate investment opportunities. Investors commit to the UK commercial property market for its ready potential to produce long-term income streams and capital growth. First theme: diversification. The UK commercial property asset contains a huge variety of property types across many sectors, providing selective opportunities for income investors. Having a tenant base which is strong enough to withstand further economic difficulties and provides a regular income stream, usually with rent uplifts that are fixed or linked to inflation, will be what keeps UK commercial property in the frame as a diversifier for multi-asset portfolios. England has a highly accredited education system and is one of the most popular destinations for international students. Student property is now a distinct and attractive asset class in this market, bolstered by the excellent tertiary education system and the growing number of international students choosing to study here. Elsewhere, attractive gains are forecast in the hotel market, driven by a resilient economy and its commerce and business travelers. Second theme: changes in the market. Environmental, social and governance considerations, as well as structural changes in the market, such as long-term trends influenced by demographics and technology, are likely to be major factors in 2022. Also, economic factors tied to inflation, Brexit and pandemic-related legacies, as well as navigating evolving business and consumer habits. Combined with the legacy of the pandemic, the outlook for the office sector does appear challenging near-term. With the exception of a potential rebound in retail warehouses, helped by the size and the spacing of the stores, retail remains out of favor. This is in stark contrast to industrials, notably logistics, where capital investment is abundant, availability is limited, and land prices are soaring. Supermarkets and selective assets within the alternatives sector are also expected to outperform. Asset management activity will remain a key opportunity to add value. This can include refurbishment work to improve valuations and attract a better quality of tenant, changing the planning use of assets to increase rental revenue, or renegotiating existing leases to extend tenancies. Third theme: the evolution of asset class. Looking at the market more broadly, the definitions of the 3 core, retail, industrial and offices, as well as alternative real estate sectors, have been rewritten in recent years given the evolution of the asset class. The longevity of low interest rates has led to growing deployment of capital and resources in the more defensive, income property sectors. Also those that are benefiting from long-term social and economic trends, such as the rise of the favorable online shopping. The expansion of relatively new and emerging subsectors, such as residential, healthcare, data storage and logistics, continues to reshape diversified property portfolios. Within this evolution is a desire for key stakeholders to embrace net zero carbon emission commitments and benefit from environmental and social initiatives over time. Fourth theme: market risk. Businesses will need to continue to review production and supply chains to minimize future disruption risk. It is very important to understand your tenant base and the effectiveness of property asset management. The impact of the working from home culture has material impacts on the location, design, and business model across all real estate commercial assets. The single most underappreciated market risk is that the legacy impact of the pandemic on consumer and business behavior is still largely unknown and remains hotly debated. The performance seen across different forms of UK commercial property has never been so stark. Since 2016, capital values across the industrial sector have risen on average by approximately 50%. On the other hand, shopping centres have declined by 50%. Near-term divergence is likely to remain, which highlights the importance of understanding the trends and risks within the market. Fifth theme: demand and supply. Investors continue to do deals in London, and they are also actively looking beyond the capital, towards the regional cities for the realization of additional investment opportunities. The UK commercial property market sees further signs of recovery as restrictions lift. The market is in an upturn with an increase in all property investment inquiries. Unsurprisingly, the industrial sector still leads the way, while office sector investment demand also picked up, pointing to a more stable trend coming through. Across all sectors, occupier demand recorded the strongest reading since 2016, reporting a pickup. Demand trends are now beginning to stabilize across the office sector, mostly for prime space. Interestingly, there is now a positive demand for office space, and the net balance in London is flat. Industrial property continues to lead, with both investor and occupier demand growing again. Retail has fully reopened. The availability of space unsurprisingly mirrors the demand picture, with availability still running low within the UK industrial sector. This is the 8th year in a row noticed a lack of available industrial space in the UK. While there is plenty of available leasable office and retail space, the recent rise in vacancies does appear to be slowing, although there is an increase in the use of incentives on offer to encourage a take-up. For the year ahead, capital value growth is expected to remain broadly unchanged, and looking beyond the mainstream markets, and values are expected to rise for multifamily residential properties, data centers and aged care facilities. Hotels are now only marginally negative, and student housing moved into neutral territory. Sixth theme: rent trends. Strong tenant demand has been seen across all sectors, holding especially firm in the London office and retail sector. Looking at trends, prime industrial rents are expected to rise by 5% in 2022 and secondary industrial rents by 3%. With the pickup in demand for office space, prime office rents have turned significantly less downbeat and are expected to fall by 1% in the coming 12 months, whereas secondary office rents are seen to be falling by 4%. Retail rents are expected to continue to fall, as projections stand at -5.5% for prime and -8% for secondary. Bottom line: confidence continues to recover across the UK commercial property market. Aided by the growth in online spending seen during the pandemic, demand remains robust throughout the industrial sector, producing strong expectations for both rents and capital values in 2022. Although, on the other side of the equation, changes to work and lifestyle preferences continue to create challenges for the retail and office sectors. A more stable demand picture coming through across the latter just hints that trends may be starting to turn in a more favorable direction. Thank you for watching the video. If you watch all my lectures, you may be able to start investing in rental properties a little quicker. Please subscribe to my channel and press the bell to get alerts when a new video is posted. Please write your comments, questions, or concerns you would like to share.